Okay, hello everyone. Good evening. So today, we're actually very happy to have Billy with us today. Later on, Billy will share a very interesting topic for today. So before we start, so let's say if you're able to hear my voice, right? Let me just do some voice testing. So let's say if you're able to hear my voice and in the chats, you can actually send a hi to me. All right. So just make sure that my voice is fine. All right. Hi, Lynn. Okay, so let me also share screen. Okay, let me share. Okay, all right. So is my screen okay? Should be fine. Okay.
Yep,
All right.
can see. Yeah.
Okay, so we are going to start our sessions very soon. So we'll start at 8 p.m. So today we're very happy to have Billy over here. So today we'll discuss how to profit from changing interest rate and also political shakeup. Because I think for this year, we just see that from Singapore side, they've just changed their PM, right? So how the stock market going to react, and also in this year, close to the end of this year, it will be also the US president election as well. So it will be something very interesting to talk about it, and also to see is there any opportunity from there. Okay, so thanks, Lee, to respond to me. Okay, all right. So right now we still have 1 minute. Then after that, we'll start today's session. Okay. Let me do some setup. Okay, we're almost 8 right now. Okay, so let's wait for a little bit for a few seconds, and after that we will start our sessions. Okay, it's 8 right now, so let me just go live.
Oh, you say go live means you go live on Facebook, is it?
Yes, hold on. Yeah.
Oh.
Okay, it's live is Facebook. All right. So,
Okay.
good evening, everyone. So, welcome to Investing Note Invest webinar session. So tonight, we are very happy to have Billy To, the head of content and investment lead with CUSI. We are very happy to have him here. So today, Billy will share with us how to profit from changing interest rate and political shakeup. Because for this year, Singapore just yesterday, we have just changed a new president, PM, sorry, Prime Minister for Singapore, and also in this year, 5th of November, there will be the US president election as well. So is there any opportunity that we can take a look further, and what are the things that we can take note before that? So you can see on the screen, so on the right hand side is our Telegram group, is Stock Market Buddies. So in this Telegram group is totally free, and every day we will have some of the professionals that will actually share some news about what is happening in the market. And so Billy, he will actually share some of his research as well, and what are the things that we can take a look on that day. So feel free to join. You can just scan the QR code and join. So it's totally free for that. So let me also share a little bit on Investing Note. So Investing Note is a social media platform. So it's a community where we allowed, and also we inside we have a lot of users. They are sharing about their stock markets view on stock markets, or how they manage their own money. So inside our platform, there is community calendar, portfolio insights, different insights. Also we have charts, price, and also alert system as well. So it's free for everyone to use. So you can either use our platform version, or you can download from Apple and also Google. Okay. So that's the short introduction. So let me stop shares. Okay. Let's welcome Billy. Hi Billy. How are you today?
Hey, I'm good. I'm good. Yourself?
Okay,
Had your
so
dinner?
yes, already have dinner already. So we are very happy to have Billy here. So the last round is we have Billy to attend Invest SG session. So today we're also very happy as Billy is the first time to come to Investing Note webinar, right? So I'll pass the time to you, Billy.
Okay. Hey, thanks for the introduction. Let me
Yeah, sure.
just share my screen first. Okay. Can You can see the screen, right? It's moving, right? Okay. All right.
Yes, yes, the screen is good.
Before I start, I'm just gonna do a bit of promotion that CGS International is running. So we have a campaign that's for cross-border trade that's going to run until 31st August. So we have a lower CBT rate. So basically your brokerage fee is lower now. So you look at Singapore, Hong Kong, and USA has been lowered. And then of course, not only that, we have a total price up to 59,000 for our clients. So if you look at the next slide here, you can see the prices. So the grand price, the first one you can get 13,000, the second one 8,000, the third one 5,000, and then there's also monthly prizes for travel warrant worth 2,000 ringgit. So all this you can also see it comes with our new mascot, the Galaxian. So we have just rebranded, so you can see our new mascot there as well. And of course, there's also consolation prizes where we give away touch and go e-wallets and boost worth 300 ringgit. So if you want to find out more about the campaign, you can come to the scan QR here, or you can go to the link there. So basically, just kind of read a bit more on the TNC lah. All right. Without much further ado, all right, I'm just gonna introduce myself a bit. For those of you who do not know, I started investing when I was in my uni days. So I want to just highlight this. I think it's important, especially given the new era that we are going into. I think when people talk a lot about investment, a lot of people talk about making a quick buck, and I hope to our investors will learn not to just focus on getting quick and easy money out of this, but looking at investing as a way to beat inflation, and that's really the core of it. Because when you invest in a business, that's probably one of the best way to beat your inflationary pressures and so that your money will not be eroded by inflationary pressures. All right, so this is just a short disclaimer. So you can see basically this is not a recommendation to buy or sell or anything. It's more an education purpose. If you want to invest or anything, remember talk to your financial advisor, because it's important to look at your portfolio as a whole rather than just look at an individual stocks. All right, so this is just a disclaimer for you to see. All right. Okay, just to let you know the content, how it will flow today. So basically, I'll talk a bit on how the US Fed rate cuts, how that will affect some of the stock market as well as businesses as well, and what we are looking into at the moment. And then second, we'll talk a bit on the inflationary conditions in both US and Singapore. Then we also look into the US presidential election and some of the key things that we are anticipating when it happens, okay? And of course, last but not least, we'll talk about Singapore's potential that there is under the new leadership, and of course, some of the economic plans that they have for until 2030. And then last, I will combine and integrate all those with some of the investment ideas that we have. Okay, so decoding the impact of potential US rate cuts. So I'm sure this is something that a lot of us look into because especially if you're investing in the US market, or if you've been following the investing all this while, right? So there's a lot of talks about when interest US rate cut will be at the start of this year. Actually, towards the end of last year, it started. So there's a lot of conversations ongoing. But I think because of some of the inflationary pressure that we continue to see, the US, the Fed has been saying that US interest rate may need to stay higher for longer, in order to beat inflation. So if you look at some of the comments that were made, Powell actually, he's actually the Fed's chair. So he actually say that, the first quarter inflation is hot, and then the strong economy and of course the lack of progress towards the Fed's inflation target of 2%. So these are three things that probably going to keep the US Fed rate from cutting rate so soon. But having said that, right, just to point out, the last meeting the Fed dot plot that showed continue to indicate that rate cuts remains on the table. In fact, if you look at the Fed dot plot here, you can see the chart here. This is from the FOMC. So you can see 9 out of 18, meaning 50% of them actually projected 75 basis point cut between March until December this year, meaning that they're expecting there to be 3 rate cuts of 25 basis point each time towards until to the end of this year. So of course, since then, the Fed has took a more hawkish turn, in during the FOMC meeting because of the inflation data and everything. But yesterday, actually, the latest CPI data actually resumes on the downtrend. So this shows that domestic demand has cooled. So this would probably be something that we all need to take a look into it. But what I'm trying to tell you is that, why I show you the first slide and the second slide, you notice that what I'm trying to tell you is that there is a lot of conversations about when the Fed rate cut will happen, right? So the odds of a Fed rate interest rate cut initially was like 90% and 60% and 40%. So if you follow the news, you'll see that on a daily basis. So what I'm trying to ask my clients or my investors is this, right? We need to look beyond the timing of the US Fed rate cut, because like it or not, the Fed rate cut is likely to happen eventually, because interest rate is at a very high level. So at best, we're probably looking at, even if you're looking at one rate cut or towards the end of this year, or even at the beginning of next year, you'll still be seeing some sort of form of cooling in terms of on the interest rate. So that's something that I think is bound to happen. So it's not about just focusing on the timing of the US Fed rate cut. It's about looking at the opportunities that exist during this period of time, which I will mention it later. So what does the Fed rate cut means for the stock market? So if you look at this chart here, this is basically the US market, right? A lot of people expect, when there's a rate cut, then, the stock market will rally. But historically, if you look at the trend, you can see that almost every time and there's a rate cut, the stock market actually come down. You can see from in 2001, then you can see one in 2008. And then, of course, there is a short one in 2020. So what I'm trying to point out to you is that a lot of times, while people expect, there's a certain expectations that when a rate cut happens, the stock market will rally. This has not been proven to be the case, because usually when the Fed rate, when the Fed decided to cut rate, is probably because the economy is not doing so well. So generally, the market will also react in accordance to how the economic condition is. So if you look at historically, a Fed rate cut doesn't necessarily mean a rally in the stock market, right? So, but what's more important is we should look into what does a Fed rate cut means for businesses. And I think this is very important, because especially if you're looking to invest in Singapore, because Singapore is predominantly dominated by two sectors. I think for those of you who've been investing, you know that the banking sector plays an important role. I think costs about 50% of the STI. Then there's also a lot of REITs that inside the Singapore market that offers a lot of attractive dividend yield. So, but a lot of these businesses, for example, REITs, they are affected by the higher interest rate. So this will be a benefit for them. So in short, I think what's more important is when you look at the Fed rate cut, look at what it means for businesses. What it means is that there will be lower financing costs, right? Increased consumer spending. People will start to spend again. Right now, if you look into the US market, you can see that spending on house property is very low, because I think it's quite difficult at interest rate at this level. Of course, the impact of it onto household have not really been translated yet, because I think quite a lot of them have also take advantage of the low interest rate and packed to the low interest rate environment during that time. So we are not seeing the full impact of the high interest rate at this juncture. And of course, if you follow US closely, you also know that Biden has actually approved a certain debt that forgive student loan debt and all that. So those are things that continue to keep the consumer spending in US at this juncture. But a Fed rate cut would help to boost that as well. So, and of course, there will also be an improved investment climate and probably a weaker dollar as well. I'm going to talk about what to invest towards the end, right? So I'm just going to talk about the conditions that we are in first, so that everyone is clear about where we are and some of the basis that I have in making some of those investment decisions. So next one is looking at inflation. So if you look at in US yesterday data, inflation actually moderated. So there is an expectation that the inflation will continue to moderate towards the second half of the year, but at this juncture, it still remain much higher than the Fed target of 2%. I think it's also important for us to look into the geopolitical tension, especially in Middle East, how that translates into especially on the oil price, commodity prices and all that, because that will have an impact on your inflation, especially on oil, your energy, your food and all that. So those are areas that we need to look into. And we are living in a world that is more divided than before. We look at US, there's a lot of talks about the tariffs and everything with China. There's a lot more division in the current environment. So things will also be more expensive, because if this is the case, if this is the new normal, you're expecting to see shipping costs and all that to increase. Manufacturing costs will also increase, because companies have to diversify a lot of their supply chain away from just relying on one central place like China, for example. So they probably have to set up a factory in China, some in Southeast Asia, then some in US to cater for different markets. So these are areas, these are things that will have an impact on inflation in the longer term basis. But what about in Singapore? I know that a lot of us here are Malaysian, so just to give you guys some color on how the Singapore inflation condition is. March data actually shows that core inflation at 3.1% and headline inflation at 2.7%. So this is also a decrease from previous months. Just to let you know what's driving the inflation there now. So you look at some of it. So private transport costs in Singapore has actually declined. This is basically due to the lower COE premiums. So for those of you who do not know, Singapore, you need to get the COE in order to buy a car lah. So you look at February was 1.4%, but in March it's a negative 0.3. Then there's also the food inflation. I think not just food inflation, services inflation, basically most of it have also cooled or slowed down a bit because of the smaller. So for example, the food is due to smaller prices of non-cooked food items, then the decrease in airfares and slower rise in holiday expenses. So if you've been following Singapore, you know that Singapore tourism has been doing very well. It's picked up very fast. I think it's probably one of the best country in terms of managing COVID and reopening the country to everyone. So I think if you look at yesterday's news, SI actually reported a slight increase in their earnings and a record profit. So if you're working at SIA, I think some of their staff got about 8 months of bonus. So this just shows the strong tourism environment in Singapore. But of course, because of it, it actually come down a bit now. I think people are becoming more aware of the high or expensive airfares and are starting to look for deals instead of just buying what it is. And of course, you look at the same thing for clothing, footwear, and of course, alcoholic drinks and tobacco. Then there's also the rent. So if you are staying in Singapore, then you know that housing rents in Singapore is very expensive now. But there is a smaller increase now, so things have started to moderate. People are starting to pay attention on the high cost. So cost of electricity is also rising at a more moderate pace. So what is really driving this is, if you look at it, it's mainly due to the declining import cost pressures and a cooling labor market. So MAS and MCI actually expects the core inflation to continue to moderate, and both headline and core inflation is projected to average at between 2.5 to 3.5% for this year. So in terms of the US presidential election, so there are a few things that I think we can keep an eye on. I think a lot of us are quite aware of it if you've been investing or been reading up on the investing news and everything, right? So trade war with China is likely to heat up, and I think we've seen it already. Biden has announced a tariff hikes on imports on various Chinese goods. And of course, Trump has also slapped stiff tariffs on China and other countries back then in 2018 and to 2019. So we expect to see more of this as we approach the US election towards the end of this year. So probably 5 months leading to the election, there will be a lot more talks about what the two presidents are going to do to protect the US companies and stuff like that. So expect that on both, not just the usual trade and everything, also on your tech sector as well, because I think tech is probably one of the areas that both China and US are trying to dominate, especially on advanced manufacturing of semiconductors. So those are areas that we expect to hear more as the lead up to the US elections come nearer. Then, of course, one thing is the short-term market volatility. Just to give you guys some data. So if you look at the chart here on your left side here, right? So on average, market volatility actually increased 30% in 5 months leading up to US election. So you can see the November section here, you can see that the average monthly volatility has gone up quite a bit. So of course, usually after the election, the volatility falls sharply after the election. So we do expect to see some of that in the months leading up to US elections. And I think this will include not just the US tech players, also some of the pharmaceutical players as well. So you see that there will also be a lot of talks about, whether you want to you all protect the smaller players, how the tech companies are dominating or monopolizing some of the industries, how AI is going to be affected, stuff revolving free speech, and of course, I think the social media players will also be in the news quite a bit. So those are areas that we expect to see, as we enter the closer towards the US election. All right. Meanwhile, in Singapore, I think as mentioned just now, Lawrence Wong. I think this is the first leadership change in 20 years. He has just been sworn into as the Singapore's new Prime Minister yesterday. So not only him, I think the Trade and Industry Minister Gan Kim Yong has also been promoted to be the Deputy PM, and of course the former PM Lee Hsien Loong will stay on as the Senior Minister. So it will be very interesting because this will be the first time that Lawrence Wong is the first the first Prime Minister that is born after the country has gained independence. So it'll be interesting to see how he lead the People's Action Party into next general election, which must be called by November 2025. Of course, I think a lot of us in Malaysia, if you compare the Singapore political landscape and ours, is not really comparable, but it will still be very interesting to see how some of these changes going to affect Singapore over the next 5 years, 10 years. Now, I'm just going to bring you guys to some of the interesting stuff that the Singapore economy or plan has in the longer term. So this is basically the Singapore economy 2030, so the blueprint or framework that they has set for the country. So trade 2030, I think the goal is really to increase Singapore trading volume and diversify the types of trading activities within Singapore and expand their trade globally. So I think they wanted to embed Singapore more deeply into the global supply chains. Of course, bear in mind, Singapore is a very small country, so this is something that it will be very important for them. And then Enterprise 2030, I think I'm going to emphasize on this a little bit later because I think this is the part where the Singapore wanted to focus on with not just digitalization or artificial intelligence. So they basically wanted to support local SMEs to help them to go international and to focus to help them to really migrate into the next wave of growth, which is probably led by artificial intelligence and digitalization. So this is really an interesting area that some of the listed companies in Singapore are going to benefit from. And then there's also manufacturing 2030. I think they wanted to increase manufacturing value add by 50% by 2030. So they are also targeting advanced manufacturing. So I think this is an area that will be quite interesting and challenging for them, given how expensive Singapore is. I mean, if you look at, for example, opening a data center in Singapore as compared to opening a data center in Johor, the cost difference is going to be about close to 10 times different. So these are things. These are some of the challenges that the country will have to face over the next 5 to 10 years. And of course, services 2030. I think this is one area that they have done very well to position themselves as a hub for businesses, lifestyle, and tourism. So I'm sure a lot of us are aware that Taylor Swift has an exclusive concert in Singapore as compared to going to different ASEAN, Southeast Asia countries. So this is one of the things that gonna make Singapore or differentiate Singapore. So I think that a lot of people are getting to know Singapore, aware about Singapore, right? So if you talk about nasi lemak or any type of food there, some of them thought of Singapore, they don't realize that it's actually from Malaysia, for example. So this is what the Singapore has been able to do, and we'll see how they're going to change and transform the country over the next 5 to 10 years. Now, investment in AI, just for those of you who do not know, they actually have a national AI strategy. I think they're quite nice 2.0. So that will include an investment of over 1 billion over the next 5 years in artificial intelligence. This includes not just on the infrastructures and everything, it also includes local talent and how to retain talent and stuff. So it will be very interesting to see where this will lead the country going forward. All right, now I think I talked a lot about basically on the environment that we are in, or some of the challenges that we are facing, right? So next is how do we profit, or how do we take advantage of this current environment? So here are some of the investment ideas that I have based on the climate that I talked to you just now. So I think first of all, it's really dividend play, I think will come in very important. So I'm just going to highlight the Singapore REITs a bit. If you look at the overall Singapore REITs, the current yield, this is as of, I think, end of March, I think. Sorry, end of April. So the average yield that the Singapore REIT has is at 7.9%. So it's significantly higher than your STI index or your yield or even the inflation rate. So this is one advantage that is. Of course, this is partly because Singapore REITs prices have come down quite a bit. I think it's probably due to the high interest rate environment. And when there is a talks about interest rate to remain higher for longer, there are concerns on how Singapore REITs can withstand some of this pressure in the near term. But if you just look at the latest earnings results that have just been announced, I think a lot of the Singapore REITs have done very well considering the environment that they are living in. So I think they have been able to navigate these challenges in a very positive way. So in fact, I didn't put it here, I think I overlooked it. So their net gearing ratio, I think for average is about 38% around there. So it's actually significantly lower than the 50% mark that MAS has set for them. I think this really gives them the advantage to recover in the event that the Fed start to cut rate. Next is really your banking stocks. I think, as mentioned earlier just now, I think the timing of the interest rate cut is really a challenge, right? I mean, trying to time something that is controlled by a group of people that is not based in Malaysia or Singapore is going to be very hard, especially they are looking into what's happening in US, then there's the general election that's coming up. So instead of trying to time the market, I think what's more important is to hedge your bets. And one way to do it is really to continue to invest in some of the banking stocks in Singapore. So for example, I think DBS Group, they have a dividend yield of around 6.1%, UOB has about 5.7%, and OCBC has about 5.8%. So these banking stocks in Singapore are very large and very huge. So they are basically reflecting on how the economy in Singapore is doing. So if interest rates were to remain higher for longer, it's actually better for them because of the NIM, the net interest margin that they have. So that they'll continue to be some of the beneficiary of that. So of course, in the event that the interest rate cut, you have to look into some of the structural or growth driver that there is for each of these banks, which I will highlight later. All right, I'm just going to go specific a bit on some of the Singapore REITs. So if you look at Singapore REITs, I'm just going to talk a bit some of them. So there is some retail REITs that these are some of the REITs that I love, that I like. So I could be a bit biased. So take this with a pinch of salt. So like, for example, CICT CapitaLand Integrated Commercial Trust. So these are the retail REITs and that I like, Fraser Centrepoint Trust, Landlease Global Commercial, and Mapletree Pan Asia Commercial Trust. So Landlease Global Commercial REIT is one of those that has a rather high yield. It's about more than 7%, I think, their dividend yield. But of course, the risk is there because if you look at the sponsors, CapitaLand, Frasers, and Mapletree are strong sponsors there. So Landlease, the sponsor is probably not as big as these three. So there is a difference in terms of what you're looking into when it comes to REITs. I think I talked about it before. I'm just gonna repeat it here. When I invest in REITs, the few things that I look into is your sustainability of your dividend. Basically, how much are you gonna increase in terms of track record? How often do you increase your dividend? And of course, your gearing ratio level, and of course your track record. So those are key things that I look into. Dividend yield is probably not the first one that I look into. Then of course another thing is your sponsors, which I think is going to play an important role. So there is a bit of risk if you're looking at Landlease Global Commercial REIT. But I think at this current level, it offers a very attractive view for investors to look into. Similarly, for hospitality REIT, I think I talk a lot about CapitaLand Escort Trust. In fact, I think I just wrote something about CapitaLand Escort Trust today, 5 key takeaways from their earnings. So I'm quite impressed by their earnings, and of course, they've been trading at around 90 cents to $1 for quite a fair bit, but they're also offering a fairly attractive yield of 6 or more than 6%. So basically, they are doing hospitality hotels and long-term stay and short-term stays like hotels. So they benefited from the global tourism recovery, which I think they will continue to benefit from it in the next 1 year, 6 to 12 months. Sorry. Then the healthcare REIT is something that's probably more suitable if you wanted to look for something that is defensive. So I think a Parkway Life REIT will be something that's good for you to have because it the dividend yield is probably not as attractive. It's close to around 4% plus, but it gives you something that's more resilient and defensive because healthcare is generally more resilient in terms of their business, even in times of a recession. So then the next one is some mixed REIT, which OUE REIT is a smaller REIT. I think I wanted to highlight them because I think they also have hotels and also have offices. And I kind of like the REIT for their yield as well. Just like I talk about Landlease Global Commercial REIT, I will highlight a bit more on OUE REIT later when I talk about some REITs in specific. All right. So this is CapitaLand Escort Trust. So as I said, their earnings in first quarter has been great. So you can see here they've seen strong recovery in their operational performance. I think first quarter their revenue per available unit has reached 100% of the first quarter in 2019 levels. This means that they've recovered to pre-pandemic revenue rates. And of course, key markets like Australia, Japan, Singapore, UK, and US have actually seen increased of more than 100% of the first quarter in 2019 levels. So this shows the strong market resilience and growth potential that there is for the REITs. And then there is also their financial position. It has a healthy gearing ratio of 37.7%. I think if you look at the CapitaLand Escort Trust, one of the key things that I did not put it here, but I think I just want to highlight it, is that their portfolio, their assets are across a lot of different geography, and this gives them a bit more resilience in terms of how they're gonna stand in the event that the economy might see some slowdown, and they are also supported by some long-term stay, not just hotel. So that's actually giving them a bit more strength in terms of hedging against the downside of an economic cycle. But at the current moment, I think they are really benefiting and one of the key beneficiary of the global tourism recovery. Okay, then there is the CapitaLand Integrated Commercial Trust. I think similarly, you look at their portfolio performance, you can see occupancy rate at 97%. There is a slight quarter-on-quarter dip, but it's still at a very high level. And I think one thing to highlight is their positive rental reversion, which is across its property segments, with a notable 7.2% rental reversion in its retail portfolio. So the suburban malls actually perform better compared to downtown malls, and this growth is really supported by increased foot traffic and tenant sales, which increased 2.1%, 3.6% year on year. Then there's also their strategic asset enhancements and future growth prospects that I think just want to highlight a bit. So you can see they've done AI at IMM building, which is going to boost some of their properties' appeal and value. They have also raised their 2024 full year rental reversion guidance to a high single digit. So this shows that they're quite confident of their rental income, at least in the near term. Then there is also some plans that they have with, I think, with the ECB that are set to strengthen their financial standing and enhance shareholders' returns. Okay, what about high yield rates above 7%, which I said about, I talked about OUE rate just now, so I just want to mention it a bit in more detail. So if you look at their business and you see that their latest earnings, you see that their hospitality segment has done very well, 22.7% increase in its revenue. I think it's driven by the Hilton Singapore Orchard, which saw a 32% increase in revenue per available room. This shows the strong occupancy and profitability level. Then the positive rental reversion, which I wanted to highlight. I know that the office is a concern for a lot of people, but there is a positive rental reversion across its commercial properties, and this includes 12.6% rental reversion in Singapore office portfolio. So I think this shows the resilience of his and the ability of him to increase rental income. Then, of course, I talk about the dividend yield. I think at 7.4% is a very compelling and attractive rate for a lot of investors. And I think just to look a bit on their track record, you can see that they've actually done some asset enhancement initiatives, which in Crown Plaza, Changi Airport recently, that helped to drive some 5.1% increase in their revenue per available room. So these are some of the improvement that will continue, that I think will continue to sustain OUE in terms of their ability to generate attractive returns or distribution to shareholders. Okay. All right. What about banks, right? I talked about banks just now. So which banks are more suitable for you? So I think this is a question. There's always a question like, should I buy OCBC or should I buy DBS or should I buy UOB, right? So there's always that question. In general, I don't have a very strict in terms of which bank would be better than which one. I think the three banks are in general quite a good option for investors who want exposure in the financial industry, especially in Singapore. But here are some of the differences. So if you look at OCBC, I think one of it is the latest news that if you've been following, you know that the acquisition of Great Eastern is likely to strengthen their position in the insurance sector. So this will definitely sort of drive a higher, longer term profitability for OCBC. Then there's also their wealth management. I think OCBC is doing pretty well on that, and they continue to tap on affluent client segment to drive revenue growth. So DBS, I think they are more known for their digital banking. Of course, we've read some of the news about some disruptions in their digital side as well. So these are things that we probably want to look into, but it shows them they are probably the more innovative among the three banks. And then they're also expanding their wealth management. You can see an uptick in wealth management fees, which is driven by high net worth individuals. And this actually helped to support DBS revenue diversification strategy. Then UOB is basically sorry, just saw the question why industrial REITs are not on the list. Yeah, there is. So I'm going to talk about some of the industrial REITs later. Yeah. Then so for UOB, I think if you know, UOB has actually acquired Citigroup. So this is basically the expansion into key South Southeast Asian market. So this is very interesting to see how they're going to capture the growth outside of Singapore as they diversify their geographical revenue sources. Then of course, sustainability part, I think is pretty much standard. So it depends on what you like. So personally, I think OCBC would be my preference among the three at the current juncture. But if you want something that provide you with better yield, I think DBS offer the highest yield among the three banks. So it really depends on what you're looking for at this point when it comes to investing. And building a resilient portfolio against inflationary pressure. So I'm just going to highlight some stocks here. So one of it is basically Sheng Siong Group. I think Sheng Siong, the business itself allows them to thrive whether in a good or in a down cycle. So basically, they are a supermarket operator in Singapore. So I think their growth driver will be driven by the opening of new stores lah. But in terms of the revenue and their profitability, I think they're pretty resilient. Whether it's good time or bad time, they offer that sort of value for customers. And then it's also very interesting to know that they don't have debt. So I really give them that they're really not affected by the high interest rate environment at this point. So this is something that I think Sheng Siong stands out as compared to the rest. Then there is your Genting Singapore. I do like businesses that generate positive operating cash flow. And I think Genting Singapore is one of those businesses that's gonna be cash generating positive, or those that will be better. Sorry, there's the okay. Then there's the Thai Beverage Public Company Limited. I think this is also one of the stock that investors can look into. I think at current level, it offers some attractive entry level for some investors who are interested to tap on this. Okay, I'm just gonna jump to the beneficiary of the US and China trade war. Just gonna mention some of them. Not all of them, but some of them are here. So for example, you can see, I think some of the shipping stocks are, if you followed a webinar that Brian and I did yesterday, then you know this as well. And actually, in fact, my colleague showed some technical charts about some of these stocks yesterday as well. So some of these shipping stocks like Samudra, Marco Polo, and Yang Zhejiang probably benefit from some of the supply chain risks in North Asia. I think the diversification away from China and all that will probably benefit some of these shipping stocks. Then there's also the semiconductor players. I think Venture Corp is probably one of those that will benefit. And I think at its current level, and of course, based on its earnings, is pretty attractive level to really go into. Then if you've been in Malaysia, then you probably know Top Glove, right? I think yesterday Top Glove share price shot up quite a bit. Of course, today we've seen a pullback and it's actually come back down. But I think the tariff that is imposed on some of these Chinese glove makers will have some, is definitely a positive news for Top Glove. But if you look at earnings like Riverstone Holdings, this is also another glove maker listed in Singapore, you can find that their earnings have actually seen some recovery. So it's probably signs that the demand for gloves is coming back. Whether it's in a strong way or in a gradual manner, it's definitely way better than what it was. And if you follow, I think Sri Trunk in Thailand is also another glove makers. They've also reported earnings recovery, and of course, there are also signs that demand for the glove sector has actually recovered. So these are some of the beneficiary of the US-China trade war. And then for Singapore's long-term growth potential, I just want to highlight this, and I think it's important to mention some of this. So for example, I think data center REITs are some of those that I think investors can look into. I think I kind of like Keppel DC REIT. I think there are some challenges in terms of the repayment, and I think it's currently in negotiations on that front. But Keppel DC REIT, I think in the longer term basis, and a lot of the bad news that we have here have largely been priced in. Then CapitaLand Ascendas Street, I think is also one of those that is good for data center exposure, and it's also supported by a strong sponsor. Then there's also your Mapletree Industrial Trust. So these are three of the REITs that I think will give you some positive exposure to data center booming in not just in Singapore. And I believe like we've seen in Malaysia as well. Like I think YTR has benefited from it. I think the share price has run up, and Nvidia come and talk about investing in the data centers and stuff. Then there's if you notice the news, you can see all the big tech players have actually come to Southeast Asia to look for opportunities. So these are areas that you want to have exposure in for a longer term growth potential. Then the increasing digitalization and investment in AI, I think this will help to create a more connected society. So I think Singtel and Netlink and BN Trust are one of those that I think investors can look into. Then for tourism, I think I mentioned it just now. I think in the longer term, Singapore will position themselves as the go-to place. I think it's slowly taking over some of I mean, probably the only challenge is the high cost because of the strong dollar and the expensive. And, if you come to Singapore, it's probably more expensive as compared to you go to Thailand and stuff. But they have actually managed to stand out and show themselves to be resilient despite of some of these challenges that they have. And I think some of these companies that I mentioned here, I think I didn't put the stock code for Genting Singapore and CapitaLand because I've already mentioned them, like your SATS, your Singapore Airlines, and ComfortDelGro. I think they're gonna benefit from it in the longer term as well. Okay, I'm just gonna take some questions in a bit, but before I go to that, I'm just gonna put it here. So basically, if you want to know more about some of the stocks that I think just now Darren said that I also share it on Stock Buddies as well, but we also share it on our CGS International Telegram group for the latest SGX stock updates. So you can scan it here. I'll key in the link later on the chat box as well so that you can tap into it. All right, let me just close my slide and then, yeah, let's just see what we have in terms of the question. Who do you think will win, Biden or Trump? Okay. This is not is there anyone that answered the question? No. Okay, what do you think about the inflation and war effect on Roma international profit earnings? I don't personally cover Vilma lah, but I think if you look at I think our research house, we still have a buy call for Vilma. Earnings have been affected for sure. I think it's actually not performing as well as expected. I think it failed to meet expectations. And if you look at our technical analysts, we actually had a buy call for them. But due to the earnings season, I think actually the share price has actually come down quite a bit. But overall, I think if you ask me, I think the sorry, wait, let me just open some slide to show you guys. Give me a sec. No. Yeah, I think despite the underperformance, I think our analyst is still quite positive on the counters. So they actually have a 394 target price for Vilma International. That represent around 17.9% upside. So it's something for you to look into. How big is the composition of the banks and REITs in? So the banks itself is already about 50% of it. So it's more than 50%. Yeah, Maslan. It's quite high actually on that front. Just close this. Okay. Think why is logistic REITs not on the list? Sorry, I do like some of the logistic REITs, but I didn't put into it because I think I was wanted to highlight some of the stocks that will benefit from some of the environment that I talk about. So if you want to talk about logistic trust, I think Maple Tree Logistic Trust is one of those that we actually have a buy call. I think we have a target price of about wait, let me see, 185. Yeah, so that's quite an upside from its current level. I think this dividend yield is also fairly attractive at about 6.7%. So if you're looking into logistics, the Fraser's Logistics and Commercial Trust is also one that you can look into. Big is that in percentage? Masa, I don't have that answer on offhand with me, so I'll have to get back to you on that. Yeah, once I check. Sorry. Any other? What do you think about the recent rally on glove stocks? Okay, I think the rally is probably premature if you ask me, because it's probably due to a lot of sentiment and a lot of news flow, sort of people are just reacting to it. But I do think that in the longer term basis, some of the some of the not top, some of the glove companies actually offer some opportunities for investors to invest in a longer term basis. But in the near term, I think the challenges are still there. And even if, let's say, there is a tariffs on some of these Chinese rubber glove players, I think it's only going to take effect in 2026, the increase in the tariff. So yeah. Then how us US REIT, is it? I think US REIT is probably, especially if you're looking at office REITs, is still probably not too attractive to go into at this point. So I would stay away from that at the moment. Be effective for maintaining in next quarter, or there's a risk to lose customer. I don't think you lose customer just because you cut rate. I think it's not I don't think that's really the key strategy is not really just to maintain your earnings. So when the banks look into interest and for saving accounts, they actually look into a lot of different factors like how much they need in terms of the cash flow and stuff like that. So there are a lot of things that take into consideration. So I don't think this itself will be a determining factor on losing customers. Nvidia. Oh, this is sorry, this is on Singapore market though, so I'm probably gonna skip this question for now. But yeah, if there isn't any other questions, then I'll probably take it lah. But for now, I'm just gonna skip it first. Okay. Let's see. It's okay. Think jump far. Give me a sec. Okay, for Jaffa, I think if you follow our research, analyst is also quite positive on the F&B player. I think they're expecting a 37 cent target price, which is a 13.8% upside from where it was when the report was written. I think their earnings have been pretty good. I think due to improve and better SP. So I think in the near term, in the next 6 to 12 months, is probably one counter that you can consider looking into. Yeah. Oil and gas counter. Sorry, I don't cover oil and gas, so I don't really know. But a friend of mine did write on technical analyst did write on Rex before. So a lot of technical movements there on and off. So you can keep an eye on that. How do you choose from Genting Singapore or Genting Malaysia? I think it's quite an interesting question. Maybe Darren, if you want to join in, you can join in. So I can just so it won't be like I'm talking to myself. Yeah. So
Hello.
yeah. So for if you're asking whether it's Genting Singapore or Genting Malaysia, I think it really depends on your exposure. Right? I think okay, when I look at investment, I think it's very important for us to really differentiate how we are investing, right? I think it's key to look at if you are working in Malaysia, you're earning in ringgit, you're staying, your property is in ringgit, everything is in ringgit. So you want to diversify a bit away from your Malaysian ringgit, which in this case, I think Genting Singapore will offer you that hedging. So as compared to just investing into Genting Malaysia. Of course, in terms of business, Genting Malaysia in terms of size is probably bigger. But I think Genting Singapore offer you that sort of diversification that it will be very interesting. And it's also very important to note that every time during Malaysia's whenever there's an election, right? If let's say a certain party win, then there's always a concern whether how the casinos will be affected and stuff. I mean, even in recent times, I think there's a talk on opening a casino in Johor, and then it creates a lot of hoo-ha, right, in Malaysia. So those are some of the risks that we can look into and consider when investing. So I think Genting Singapore offers that protection from that. Yeah.
Okay. I think some of us here are from Malaysia as well. So previously I actually have one questions from the crowd is they are trying to invest in some of the REITs and they receive when they receive dividends. So if they are from Malaysia, right, normally can you share like how CGSI will manage on this part?
Oh, your dividend is not taxable, so tax free one.
Okay. So yeah, so some
So
of them they might ask this question.
yeah, I mean, I think sometimes some of but CGS, I don't think iTrade has that issue. So I think if certain account, if you're using certain brokerage, not just CGS, like sometimes they will, because their system by default they will probably deduct it because of tax. So what they will do is that they will actually reimburse the deduction later on for the clients. So usually, but usually it will be done automatically lah. So it depends on which brokers you're using lah. So yeah. But if you're investing in REITs and in Singapore, it's not taxable. So you should be getting the total amount. Yeah.
Okay. All right. Thanks for sharing on this.
That's a very technical question.
Yeah, because sometimes the time there's some Malaysians that they are new to Singapore and they actually have these questions because they are interested, but they don't know how to start. So some of the questions like before is how can they start to trade Singapore market? Like from like which account they can actually open, or how they can do the registration, all that kind of things.
Okay. I
Yep.
think if there's no other question, I think you can answer the question on NVIDIA. I
Yep.
think
Yep.
MMC or the AMD. I think okay, I'll give you an unpopular answer here. I think that if you ask me, I think if you are looking for semiconductor to buy, I think one of the best pick would probably be Intel rather than these three. I think in terms of valuation, Intel stands out because it's cheap. But of course, there's a reason for things being cheap lah. It's probably because it has not been doing so well for the last few years. But if you're investing in a tech company, it's always important to look at the management. And if you've been following the company, you know that there's a change of CEO. I think the last 2 to 3 years, Pat Gelsinger, he's also a very technical person, meaning he is also coming from the tech industry, engineer, software engineer and stuff. So he knows his stuff as compared to a lot of business leaders lah. So if you look at some of the transition that Intel is going from, rather than just trying to compete with the other semiconductor players, they're also venturing to fab, and they take advantage of the large US Chip Act, basically the grant to invest into various plants. So this really gonna give them some strong advantage over the next 2 to 3 years. In fact, I think with the US China trade tension going on, right? I think and of course the concern on Taiwan, whether Taiwan can stand on its own and stuff like that. Those concerns are there. So investors will probably wanted to position themselves, or some of the businesses will probably want to position themselves in other markets. And I think with Intel, they offer that. So Intel is going to invest quite heavily, not just in US, but also in, I think even in Malaysia as well. So you can see some of those things they're going to translate. And of course, in terms of valuation, it's also much cheaper. So if you're looking from a more technical perspective, right? Meaning in terms of the tech, the latest chips that they had, the latest AI chip that they has is also very much comparable with what NVIDIA has. But of course, the benchmark it differs from whichever sources you look at. But overall, it shows a lot of improvement in terms of the tech, especially on the R&D. Ever since Pat Gelsinger returned to Intel as the CEO. So I think that if you're really looking into tech stock semiconductor, my preference would be Intel. But of course, in the near term, I think it will still struggle quite a bit. So it might still be too early, and you might miss the run like compared to AMD and NVIDIA. So you probably want to have some position there. But I do think that in the longer term, between next 3 to 5 years, we should see Intel making a comeback.
All right. Thanks for answering that questions.
Yeah.
Okay, so if you have any questions, feel free to go into the Q&A or in the chat will do as well. So Billy is here. I think Billy also have very experience on the different stocks market, and he will able to answer your questions.
Yeah. Apologies if some of the questions that if you ask because I don't cover all the companies, so sometimes there will be some that I cannot answer. So if I can't answer some of those, apologizes.
No problem. Because there's a lot of stocks out there. It's hard to cover everything as well.
Just drop. Sorry, give me a minute. Let me just key in the link to our Telegram chat, so that if you want to, you can also ask questions on our Telegram chat. So it's basically quite easy for you to connect with us, because I think we allow our clients, and of course even if you're not clients, I think we allow you to actually ask questions and everything. So it's not really filtered per se. So yeah. Of course, if you ask nonsense, we will block your message. Yeah. So this is the I think if there's no question, then it's okay. Like that, I think we can end, right? If there
Okay.
isn't.
Yeah, so I actually have one more. So yesterday,
Yeah.
Fed side actually released the news on that. I think the interest rate right now they still maintain. We're not going to change anytime.
Sorry,
So
come
and
again.
also
Sorry,
the
I can't hear you
rates,
just now. Which
interest rate
for who? For which?
for US interest rate. So they are not I think they are not cutting in anytime right now.
So you mean you're talking about US interest rate or what?
Yes.
Yes,
Correct.
okay.
Okay, so REITs also depends a lot on the interest rate, right? So any views on that, let's say if they start cutting.
So I think if they start cut, it will definitely be a benefit to the Singapore REITs lah. Because I think a lot of if you look at Singapore, the REITs they're trading at a very attractive level. I think a lot of them are trading probably below 1 times of their book value as well. Some of them. So you can look at the opportunities are there. And I think if you look at judging by their latest earnings result, is probably unfairly punished. The way I see it is because investors are probably just worried about the impact of the interest rate environment at this level on their earnings, which is a fair assumption. But if you look into historically, right, some of these Singapore, which actually they managed to withstand it quite resiliently. Partly because I think Singapore is a very small country, so a lot of their assets are also very well protected in a sense, because it's small, so their value of the property is there more or less. So it's quite, I would say that at this level, it's quite attractive to enter into a lot of these REITs. So if you're looking to generate some long-term sustainable recurring income, now is probably the best time to buy into some of these REITs.
Okay, all right. Thanks, Billy, for sharing your views on different topics and also different stocks as well. So let me just do a quick screen sharing. Okay, all right. So just now I've shared with you on investing notes. So there's the two Telegram QR code. So let's say if you're interested, can feel free to join Telegram, our Telegram group, Stock Market Buddy. So Billy and also others professionals, and we actually will have some different discussion inside. So and Billy just now also shared his Telegram group. You can feel free to join as well. So other than that, you also can join the largest investor community in Singapore, which is Investing Note. So the platform is totally free, and there's a lot more discussion and conversation going on regarding not just about Singapore and also other country as well. So feel free to join. So okay, so that's all from my side. So thanks Billy for coming to this session. So is there anything that you want to share? Like last few sentences before I end this?
Yeah, I think just want to say this, right? I think a lot of people look at investing as a quick way to make money, but look at it this way: if you're looking at the market is like, if let's say someone is selling, if let's say you're selling sorry, if you're trying to buy a chicken, right? Let's say you're talking of a live price, and there's a live price of chicken, and then go from $3 to $5. You wouldn't be chasing it when it's at $10, right? You'll be buying it when it's cheaper. So generally the idea is that you shouldn't just be looking at the trend that is chasing after the trend, but position yourself into companies that have strong values to add on. So it's just like if you think that investing note community has value, so we want to join the community because we wanted the value. So you look at companies that offer that sort of values. So I think in this opportunity, because there is going to be a lot of opportunities over the next 3 to 5 years, because things are changing very rapidly, and there's going to be a lot more disruption that we'll be seeing. Yeah, that's all.
All right. Thanks, Billy. So thank you everyone for joining for today's session. So we will be continue to share with you guys more on our next sessions of the webinar. So keep in touch and also look into our Investing Note Malaysia Facebook or our different Telegram channel. So we will see you in our next webinar. All right. Thank you, Maslan.
Thanks.
Everyone, have a good night. Bye bye.
Good night. Bye.